Hello everyone, I hope you all are doing good. September month was quite interesting in front of globally as well as domestically. That's market has significantly volatile during the month, and the central bank of the India and the US has hiked the interest rate. For the further details, let's dive into the presentation of the market outlook. Certain things happened in the month of September, like I have already mentioned that the Fed and the RBI hiked the interest rate. Repo rate of India has stood at 5.9%, where RBI has increased 50 bips in the interest rate as compared to the previous hike. US inflation number, that's a printed number, has increased by 0.1% as expected. Indian government has introduced the national logistic policy, which will help to reduce the logistic cost, and it will boost the businesses of India, and it will promote the blockchain and the artificial intelligence in the system. Rupee depreciated and make a new low at 81 during the month of September. Current account deficit also make a 9-year high, and the spread of US and India 10-year GSEC has shrinked further. And government has announced the execution of the telecom bill, in this bill that's a OTT telecommunication is included in the telecommunication services. If we talk about the that's inflation of advanced economies and the emerging market economies, and if we just club all together, that's a Russia. In Russia inflation number is in two-digit number, and the lowest one is your China. Indian inflation stood at 7%, whereas the US at 8.3%. And if we talk about the depreciation of the currencies against the dollar, uh, India has depreciated lower than your developed countries and emerging other emerging countries. It's in the just 9 point. That's a 9% of depreciation, whereas the other countries make the double-digit depreciation. Now, if we talk about the GST collection has boosted the economy. And now, if we talk about the growth of the collection, it makes the 3 years CAGR of the 13.8%, and it's increasing every month, grow compoundedly. Now, if we talk about that composite PMI, that's not in our favor during the month of September, because it has go down as compared to the previous month. Previous month it is stood at the 58.2. Now in month of the September it recorded at 55.1. Both the service and the PMI, where service and the manufacturing PMI has go down during the month of September. That's a forex reserve also is not in favor because it make the 2-year low. The main reason for the forex reserve low is your that's a surging in Indian and the dollar exchange rate, and that's a cost of commodity as well. It's hiking, so these are the main impact on the forex reserve. The same reason is impacting on the current account deficit as compared to the GDP percentage level. And this is the moment of the crude oil, and it's increased. That's decreasing at its high. And now, if we talk about the equity market globally, it's only the Brazil has given the positive return, as other countries have given all the negative return, and the Russia was the highest. It has given the 16% of absolute return, the negative return during the month of September. India has near about the 3.7 kind of negative return, where the US has given the 9% kind of negative return. This is the market cap indices performance of month and as well as yearly performance. NSE Nifty index has given negative return of the 3.7%. If we talk about that for the yearly return, it's a 3% negative. Mid-cap index has given the positive return in terms of the yearly return, but during the month of September, it has been down by the 2.6%. And if the small cap is highest in terms of the yearly return, that's a 13.3% negative. But if we compare in the month of September, it is lower. It has been that's a down lower as compared to the in Nifty large cap and the mid cap. And that's a bond index also have given the negative return in terms of the month in the month of September, but it is positive by 1% in the year. Short-term bond as well, it's negative in the month of September, but positive in year by 2.7%. Silver has given positive return in the month of September, but negative in terms of the yearly return. And gold is negative during the month of September, but it's positive by 5.8% during the year. Now, this is the sector performances. That's a healthcare sector, FMCG and telecom has given the positive return as compared to the other sectors has given the negative return. This is the chart of the inflows of FIs and DIs with the comparative comparison of the previous month. Last month, FIs infused the money and the DIs booking the profit. But in the month of September, that's a DIF outflow has increased and DIs infusing the money in the Indian economy, Indian equity market. And net on net of the month, that's a comparison. In the month of September, we have a negative outflow. That's outflow are more as compared to the inflow as compared to the previous month. And now this is the valuation of the Nifty PE. Average is stood at the 24, but current PE is at 20. That means that market is fairly valued. And now move to the bond market, and this is the yield curve, the GSEC. That's a short-term rates as moving faster as compared to the long-term. That's a 1 month, 3 months, 6 months. Short-term yields has moved faster as compared to that's a spread as compared to the long-term duration like 5 year, 10 years. And now this is the yield movement of US and India 10-year yield and the US 10-year yield all are increasing. It's a growing movement. And this is the yield spread of India and the US, and as per the chart, it is shrinking. It is going toward downward, and now it stood at the 376.2. This is. Let's move to the outlook of the month October. Inflation will remain above tolerance power and go down to 4% in 2 years. Demand will remain bullish on account of the festive time because festive season has started and that's domestic market will be fueled with the demand and supply. And the Fed will increase interest rate again in the month of December. Equity market will remain volatile in this month. Financial, real estate, defense, manufacturing, auto sectors will be bullish, and we will see growth in the market. That's the sector of the pharma as well. High liquidity in the bond market will be there due to inclusion of the India in JP Morgan index, and in the GP in this index, it is expected that the government bonds will be included, and demand for the corporate and the dynamic bonds will increase. Short and tenure bonds are suitable. We prefer that we should invest in the short duration like floating rate bond funds, floating rate funds, and the corporate bond funds. And the low duration, short duration will be favorable. Thank you.